All right, good evening, guys. Thanks for your patience. Ken at Tortoise Capital review of the daily trading report and strategy for August 10th, 2020. So let's just get right into it. Our unseasonably cool weather here in Kansas is over. It was like mid 80s with 80% humidity last week. Back up into the 90s where it belongs. So last week we saw a terrific move for the whole week. Started off near the low of the week and then just marched consistently higher and closed near the high of the week and near the 10 and the 30-day high. Today, over the weekend, there was a slight gap up, sold off earlier in the day on weakness in tech, but the Dow really was very strong with energy and materials. And then it had a very strong finish to go into the close of the day, pushing to a new 10-day high and a new 30-day high. And only finished 0.06% off of that 30-day and 10-day high, so a very strong close. It gave us an orderly range, just like the last three ranges have been, about a $3 move for about a 1%. So that's right around a 1 ATR move. When you factor in the sell-off and then the recovery, you have two 1 ATR moves for the day. So there's, for the intraday traders, there's actually two tradable moves. Let's see, our 10-day range goes from 335.7 down to a 10-day low, which was made 7 days ago, or 8 days ago, at 318.64. So that's like $17. That's about a 4.76% on a 10-day range. So that's about 4.5, almost 5 full ATRs in 10 days of directional move. And really, you realize that most of that is made in the last 6 days. So it goes from the low of the day here straight to the upper half of the 10-day range. So you get most of that move here. The slope of the RL10 is very strong, and the RL10 is so strong that the RL10 price closed higher than the 10-day high. So this is really a move that is accelerating in strength. You'll notice that the baby dragon is very steeply pointing northward. The RL30 extension is very strong to the upside, and both the open and the close were above that RL30 extension, so that acts like a first line of support. The upper skin of the dragon, the spine of the dragon is sharply northward, pointing sharp north. The slope of the PSAR is still positive and up. Tomorrow's PSAR level will be 327.3. And that's going to be approximately where the southern skin of the dragon would be as well. Maybe even slightly below. So, in fact, the entire dragon's going to be above the PSAR, and that's been true now that'll be the third day in a row that's the case, and that's really a positive sign. So to the upside, all there really is the statistical measures of the RL10 price at 336.35, the Z2 price at 336.94, and then Z3 is well off the chart. So if we get just another ATR move tomorrow, a move of about that size, it'll be pushing above 338 tomorrow would be the price. And then, so everything is just looking amazing. It's even north of the RL90, which is slow to catch up. The Support levels for tomorrow is really the, I would call it the baby dragon at 334.7. The low of the day, 330, call it 333. The northern skin of the dragon at 331.6. The spine of the dragon and the Z1 all the way back at 329 and a third. Tomorrow's PSAR will be about 327.4-ish. The peak of the RL10 from the last excursion, way back here at 328. Today's PSAR and the skin of the dragon for today, 326.5. And then if the bottom of the dragon fails, then that's really the last comfortable support level. Then after that, it's a straight shot down through peak RL270 from the past. That was 327.45. The Bollinger Band mean at 321.5. And then the 10-day low at 319.64. And that 10-day low is going to be in place, for another 2 days. And then it will rise to the current Bollinger Band mean. So this is a market that's leaving behind all of these other measures of support. So this is a really optimistic market. And today was not strength in tech that led the way. It was the other sectors. And we're going to see when we look at the segments what worked today. Wouldn't warm me out at practice today. So what worked? So today the S&P was up 0.3, so kind of a modest gain. That's about a third of an ATR net gain. IWM was next at 1%, so 0.7% better. And then the Dow was really the strength leader today at 1.3. The sectors that really did well, Japan, Mexico, and finance, like 0.7. Materials at 1%. Consumer discretionary 1.2. Clean energy 1.7. Silver 3%. Oil exploration 3.7. And then everything else was companies. And then the companies that really did well today. So the S&P was up 0.3. Twitter was up 0.8. Home Depot 1.1. Apple, Walmart, and Intel. So Apple and Walmart up 1.4 and some change. Intel up 2.4, 2.5. Devon Energy, then all our faves. Devon Energy 4.4. Caterpillar 5.3. So we're going to see an amazing trade frame on Caterpillar. We're going to review the one we did last night, what we said about the upside. And it's as if they were reading the playbook. Simon Property Group 5.2, Virgin Galactic 5.3, the metals, Alcoa 6%, U.S. Steel 8.7, Win 9.9, Cliff Natural Resources in the steel sector 10%, and then Nikola Motors, which we framed this weekend, 22%. So just amazing trades in the not technology sector. So it's not just tech leaders. That's why we're getting paid to find the movers. How about the downside? So emerging markets, 0.25. And then it started getting into the red. Brazil, minus 0.2. Wheat and precious, minus 0.2. Tech, minus 0.3. Healthcare, minus 0.3. Treasuries, minus 0.4. And then there was this cluster of tech. Let's look at the companies now. So we had Google and Coke were basically flat. NVIDIA, minus 0.3, no big deal. Basically the same as the tech sector. And then we had the cluster of tech leaders. Amazon, minus 0.6. The triple tech, minus 1 and minus 1.3, respectively. Microsoft, minus 2. Facebook, minus 2. Tesla, minus 2 1/3. Kodak, minus 27%. So it's now down under 11. So this was trading at 60 either last week or 2 weeks ago. It's down now 85%. So I'm just wondering how much of that is the just piling on those the Robinhood traders, the 125,000 new traders a day from Robinhood that were jumping on Kodak because it couldn't lose. So today was not tech. It was the opposite of tech. It was the metals and the energies, and some of these other speculators that really did well. So I want to go to Caterpillar. If I can find that rascal. So yesterday, Pavel marked off for us, and we talked about this last night in the strategy session. We took a look at Caterpillar. And we marked this up as a critical state. And it's nice when symmetry works. So a couple days ago, Pavel had marked this one up, and he saw the reward box was this green, the risk box was the yellow, and then the short risk was this red box. And then what we got was this was Friday. Come on. What we got Friday was a sell-off and then a recovery right back into the critical state. And so Pavel looked at the on the intraday trade. You could use, if you were using the minimum manageable risk box, you had like about a 0.3. If you were using the hybrid frog box, it'd be about 0.85. Yeah, that's what I'm trying to show here. So that was the risk box. And the play Friday was to take either trade. And what you got was the big move down to the PSAR, and then a reverse right back up. And so it basically recreated, as we talked about last night, it recreated the same trade frame where you have the gain box, and then if it breaks down below there, here, and then if it broke further below, you would want to have two positions, and if it broke above this, you would want to have two positions, and then you could pick, depending on whether you're trading on minute charts or 30-minute charts, you might use either one of these for the intraday move. But there was like strong support here, and then looking to the upside, we saw this cluster as a place where you would want to be adding a second position at 137, because if it breaks above this, then it runs up into here to 140 pretty quickly, and then that's where you could, and then if it broke above, say, that price, that's about where you could think about adding a third position paid for with markets money all the way through here. But really, if it can get above this cluster, call that 139.5, then that would be a real vote up. And that would be a negation of all this gap down and support. So that's the trade frame we looked at. We saw it as a critical state ready to go in either direction. And then what we got on the daily chart, this is just a throwback from earlier this week when we looked at, it was near the 10-day low, and this was the one that preceded Powell's markup. If you go back and listen to that trade frame, what we talked about was this 10-day range stretching from here to here. That's the 10-day range from the 10-day high, and had sold off to a 10-day low, and then held support on the inside day here between like 133 and 131. So we identified that as a $2 range. And we liked that because we said if this thing fell out and broke this way and broke that 10-day low, it would come down and test this pretty quick at 126. And then if that broke, it could come down and test 120 pretty quickly. So there were, two reasons to be interested on this thing to the downside. But then to the upside, you have 5 risk boxes. We said we'd really like to get the first 2. The third one would be the choice to determine, is it going to get through this PSAR flip and then go test the 10-day high. So it's almost like scoop 1 and scoop 2. Well, on Powell's trade, it gave these 2 gain boxes, then sold off, and then recovered. So there was a lot of tradability inside all of that. And then it recreated the risk box once again. And then what we got, that whole trade frame with the 10-day high, 10-day low, and now this critical state paid off because it gapped up and then did nothing but make that entire move to the 10-day high and beyond in one straight shot. So getting our mechanical entry at about call it 135.50 with a $2 stop at 133.50. You then get the move all the way to 142.50. Yeah, 142.50, I guess. So from 135 to 142, that's $7 on a $2 risk. And so the payoff, just using daily charts, is 3.5 to 1 without doing any intraday optimization. So that's really going to be favorable. And now we could look at we see that the PSAR was diverted and it broke above this support level, and it's up here testing Z2. So if you own this, then you got to decide how much of this sell-off do you want to keep. And I'd say I would probably be where the PSAR and the hump of the RL10 is. So I'll just call it about 140. So I wouldn't mind giving this, if I'm owning it here, I don't mind giving it the same $2 that we've been giving it before. That seems to be the buffer. And then you can see the next Z3 level that it has to break is here, 144, and then this would be about 146. So both of those are well within range. And you can see that all of the volume transacted here was all hitting the asking price, and so was all this volume. So that was people that were willing to own it at any price level inside from 141 and higher. So there was no haggling on price right there. That was people that wanted to own Caterpillar as the leader of the non-tech Dow, which was the leader of the U.S. indexes today. So that ain't bad. That's not bad at all. Yeah, okay. So this is what I want to say. The analysis, understanding the geometry of the trade frame, and this little $2 box as being significant, and then mapping out all of these higher price levels that give you the ability to make sense of the size and magnitude of these different moves. So this is a very, very solid trade, just using end of day data and a 30-minute chart. Now, if we go to the intraday trade, I mean, there's really a number of different moves to look at here. So from a distance, you can already see that just the hybrid frog off the entry. So there was a nice gap up and it never looked back. So you get a hybrid frog off the bottom and then up you go. And if this gets you out, and I wouldn't be offended if you got out right there, that is a reasonable exit on the first leg up. So if you're getting this position long and you get that exit, you then have to say not later than breaking above the hump of the RL10. I've got to be long again here. And now I'm using that same risk box as my risk box there. But I'd like to see you actually get this recrossing of the dragon. So when you have that strong RL10, pulls back below the dragon and then resumes again. So when you get this, 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 this little triangle in here makes up the pocket. And so any entry inside that pocket is going to give you that supported fall crossing. That's really the continuation play. Continuation of the initial trend. Or if you get the excursion above the previous hump of the RL10, then that's going to be the emerging dragon. That also is the continuation play. And whatever size box you had for the hybrid frog here feels like about the same size of that pocket right there. And what you're really looking for is the amount of time that it takes to go from crossing the dragon and then recrossing the dragon again. And in this case, this probably only took 5 or 6 minutes. In this little pullback, you might have taken a sniper exit in here. That's not unreasonable. And if you took half the position there, you had the other managerial exit down here, which doesn't get taken until probably right up in here. So this is really your second move from that entry. So now you're getting massive goodness. Now there's a couple of a couple of tries that you might have made. You're noticing this is probably going to be a Z3P, and you'd probably get a breakout in here. And then somewhere in here, you probably end up scratching that. And then you get another extended sideways quiet channel. You might have actually tried this to the downside, playing for a return to the VWAP. This probably netted out to zero or fractionals. Then notice we got this little pattern in here. This is that fake one go to. So you have a tight sideways quiet channel happening, and then it dips and then breaks out of the Z3 going the other way. So if you try this breakout to the downside, but in 3 or 4 bars it just reverses, you should be scratching this when it comes back into the river, and then you can either take it right away or wait till it breaks out of the Z3. But in either case, you end up getting this exit here or that entry there because you have a low, a higher low, and everything has set up for this upward move. And so you end up getting some kind of entry inside this range somewhere. Um, this might get you out. If that gets you out, this gets you back in, and then you really enjoy this next move. And the Wu Wei exit gives you a satisfying way to get out of there. And so Cat did nothing but just show the way today. Caterpillar for the win, and it's all triggered by that the trade frame on the daily range. So hat tip to the folks who endured that one today. Yeah, all Cliff Natural Resources did was just gap up and then just run away from the pack. Um, so there's your opening range 5. That's about a 10-cent box right there. You should be getting your entry somewhere around in here. You might have taken a sniper exit here or here. If you did, duplicate. Then if you took that first exit here, then this should get you back in, and the Wu Wei exit keeps you in. Or if you got out at this one, that recrossing of the dragon should get you back in. Then this might have gotten you out as a sniper. This one would certainly have gotten you out as a Wu Wei exit. And then if you're just playing the Wu Wei exit, let's see, get a pen on this thing. Your stop was, what's a pen? Is there a pen on this thing? So you either have the low of the day, or you play it all the way down here at the PSAR, either one, and you keep that in play until if this is your entry is this line. So this is where it crosses your entry. So you go maybe 3 or 4, and then that becomes that's where you're going to make your that little sniper-like move of your exit. So you either go from either one of these. You take that north to here, then you keep that in play until the Bollinger Band main, and then you just pick that up. I'm not offended if you pick this. and that would have given you that exit or this exit probably, as long as you're committed to re-entering. This is a good second position, even if you're using the Wu-Wei exit. That's a pretty good second position. And this might have tempted you for a third position, which if you did, then you end up taking this, either this at the PSAR flip, or you take the regular managerial exit. But that's a move of from 63 to 96 is about 35 cents on conservatively an 8-cent or a 10-cent. So that's either going to be 3.5 or 4, not counting the second position. So the first trade is 3.5 or 4. Nikola Motors was another one that we framed over the weekend. And so you had it. There was an opportunity in there to trade this first leg up, or to trade the second leg down. Wasn't much action until later in the afternoon, though. So I'm not. If you abandon ship on this one, I'm not offended. But you just gotta love this kind of Z3 pinch action, because that's about, if we look at that tightly, that's 50 cents. That's about a 1%. That's about a 1% move. And then when you get the breakout from there, never looks back. And so at some point, if you were amazing, the upside of this move was, almost $5 on 50 cents. So that's dang near 10. And so if you could get 3 out of that 10, and you can see that there were a number of places where you might have gotten these different moves where the red dots are as entries. There's some supported spring crossings and stuff like that. As long as you're seeing these support levels are holding, then buying the upside break is a good thing. So Nikola Motors really paid off. Win was also an amazing mover right from the opening. U.S. Steel is one that I played today. So there's nothing wrong with that. A move from $7.30 to $7.85. So 55 cents. That's an 8% move just right there, and after a strong move up. So plenty of things to have worked today, all based off of the weekend framing. So really, really nicely done. I was pleased to see Twitter starting to make its nice recovery here. As we're looking at tech opportunities. Because tomorrow, maybe tomorrow is tech's turn to recover. So I'm liking Twitter. So these are all dailies. When I look at Microsoft, I see an opportunity in Microsoft now that if it can hold if it can hold above the PSAR, now suddenly I would play that yellow box, a breakout above like the spine of the dragon. I could be long at 210 with a $5 or $6 stop. I would even be tempted to play a tight breakout like that. And what I'm aiming for is a move up to the top of the RL10. So I'm looking for 216 on that. That's a $10 move. So I like Microsoft there. And Amazon has pulled back nicely. NVIDIA in the chip land hasn't even pulled back that far. It's easier in Apple because Apple didn't even make it, barely tipped into the new lows. So all the techs, that one's looking pretty strong. We saw Intel as an opportunity that if it can hold this range in here, about holding the low at 48, and it has tipped back into this above 49. So the next leg up is to 51. And then if it gets above 52, it now has an opportunity to close the gap. So that would be something like this, coming up into this into that region. So if it gets past 52, then this feels like a strong vote up. And then if we look over in this region over here under the big red dot, once it cleared this support and congestion level, it ran to 62 in 2 days. So again, if it can clear this little congestion piece and get above 52, then it goes to 58 pretty quick. So I'm liking all that. So point I wanted to make was there's a lot of goodness for us today. I was not able to borrow shares in Kodak, but that just got smashed today. But it was worse earlier in the morning than it was in the afternoon. So this actually makes me want to start believing in it again, I guess. I say again, but I've never believed in it. But so I think above say $10.80, then it can get to since this is a log scale, it can get to 15 to close that little gap in here. Yeah, watch for Kodak to have a nice little pop tomorrow. That was rising VWAP, so good volume during the day and a couple strong surges of buying pressure, and finished pretty strong. So if it can get above this level at 1150 for sure, but I'm a buyer at 11 and at 1150. All right, let's go to the daily report. Oh, I should say, yeah, before we get in, here were a couple charts that were posted for today going into tomorrow. So this was taking a look at 30-minute charts. This is a frame on Merck and trying to play a breakout from the last 30 minutes. So long at about 81, call it 25, short at 80, I guess 80.50-ish, possibly 80.65. I like both of those. And I think if we see another day tomorrow like we saw today where the non-techs are leading the way, then Merck is certainly, it showed little interest in collapsing today and closed the day pretty strong. So I could see second day momentum on Merck. So I like the Merck frame. I think Joe posted that one. And was there another one? Yeah, this was also a trade frame for Merck, and so it's on everybody's radar. Yeah, so if Merck gets above 81 for sure, then it can get to 82.5. This is the one to worry about, though. That was the one that triggered kind of the sell-off. But today was a nice reversal. The dragon held support. So second day continuation could actually look like this move here from about 79 to 84. In 2 days, it moved $5. So there's reasons to believe in Merck. Merck had some moves back here from the 80 to 85 range, to 84 range, I should say. So that's certainly well within range. Okay, let's get on to the daily. Okay. So we've got a strong bull still, overbought on every time frame. We're almost 8% above the sideways boundary. ADX has now moved up across 20, still neutral, but getting better to the upside. That's supported by this second phase of risk Z, which hasn't failed further, so there's still reasonable upside available. It is not overcooked, it's still neutral, and it's favoring risk on, so taking the risk on the swing is there. It's been pushing overbought for quite a while. It can stay that way. Only Asia less Japan and Latin America are below their 200-day moving average. Big leaders today was AT&T, Diamonds, and Walgreens, Home Depot, and Cat. The best value plays, the 10-day max pains, Microsoft, Merck, Coke, Pfizer, Disney. Disney especially seems like an opportunity. I think Microsoft is too. And we just made the case for Merck in a couple different trade frames. Excuse me. When you see that many firing red under the overreaction short, what that means is that we had previously had a really strong sell-off, and now even the weaker sectors and companies have made a considerable bounce. And then these are the ones that if the market began to show weakness and these were weaker, that would be the place to go for shorting. So you'd be looking at Walgreens and Boeing, Travelers, American Express, ExxonMobil, Chevron. So energy and finance. Excuse me. On the upside, let's see. Merck is a 5D. This is nice. It's a doji. It's a 5DD, and it's 2.5 to 1 on the auto framer. So we're liking it. And even today's little down move was only 0.1%. So Merck looks pretty reasonable. Apple just resumed its winning ways today. It's green on everything. Boeing and Nike both look really good 1 day and 10 day. So nice recoveries there. Just a handful of dojis again in the ETFs. You have a channeling in Treasury, so it's now time to It has pulled back far enough to get people's attention if they want to start adding to those defensive positions. Brazil and Latin America, the only ones testing out on the auto framer. Big strength down here in the Dows and in silver. Metals and mining had a big day and month. Oil exploration showed a nice recovery here. Really shaking off that smashing that the energy sector took. Silver, gold, Verizon, and Apple. Negative Z stretches, Intel, Microsoft, and Treasuries. I think you have to take the opportunity to buy quality on sale. That's three pretty quality symbols. Merck and Pfizer getting close to the pinch, that compressed pinch box. Merck, Latin America, Brazil, and the auto framer test out pretty well. And here's all of your mechanical framing data located there. Treasuries at a deep discount, along with healthcare. Johnson & Johnson, Morgan, Intel all get my attention. And these are the clear relative strength winners. Home Depot, Disney, McDonald's. Lots to choose from on the daily squeezes. U.S. mid-caps in healthcare. Johnson & Johnson's in there. A real strong distinction between those that are falling and those that are recovering. Silver and tech, well postured. I'm liking Intel having made that turn and keeping strong support at 48. Microsoft is an anomaly here with that sell-off, as are treasuries at minus 17 on the 3-day NDX. But otherwise, today was a day for everybody else to enjoy. Nike feels strong. Caterpillar just knocked it out of the park. And U.S. Steel is a deep value play. And Mexico is kind of in the same one, where it's horrible on the annual in the yellow, but is improving steadily as you get shorter and shorter time frames. Yeah, Mexico's starting to feel strong, and if we just extend this support level here, it held. So now if it can break above this, 33.5, then all of this, the next stop up here is 34.5. So that feels pretty good. That's the move right there. I'm liking it. And I think I could be short if it broke below the PSR. Yep, that's Mexico. That's everything I wanted to cover from the daily report. Lots of good signals and symbols to frame for tonight. Let's have a good after action review. Frame your daily trades, and then, frame the trade, then trade the frame, as we say. And that's everything I got for it. I posted some inspirational videos on the in Patreon today. I thought that little kid that was challenging us to say, what is it that you're practicing? What is it that you're doing every day that you're going to get better at? So if you're grumbling all the time, if grumbling is your practice, you're just getting better at grumbling. So I just thought his invitation to be joyful, little 8-year-old, I just thought it was right on target. Felt pretty good. All right, guys, that's everything I got for you. Let's take good care.